Hello traders, the title of the video is Elliott Wave Forecast S&P 500 Index. Previously, we were counting waves for the S&P 500, and this is the first wave, and then we have the second wave right here, and then we have the third wave, very long third wave that has been subdivided into 5 minor waves. First minor wave, second minor wave, third minor wave, fourth minor wave, and a fifth minor wave. Now for traders that are very new to us, please accept my apologies. I do not remove lines from my chart, so this is the end of the third wave that has been subdivided into 5 minor waves. So I was saying to traders that we are expecting the fourth wave. When I say expecting a fourth wave, I mean an orderly fourth wave, something like this, orderly. But what we have seen is not an orderly fourth wave, though the price did touch the level of 2339, all right, here, but it didn't come down as we were expecting it in a gentle fashion, in an orderly manner like this, in a diagonal fashion to touch that level of 2339. But it just went vertical, boom, down. So now the question that is playing on my mind so far, is this the end of the third wave? Now, correction, is this the end of the fourth Elliott wave for the S&P 500? Now, I'm recording this video today because a YouTuber, I call him Bill, all right, Bill, okay. Thank you for asking an essential question. I promise that in the near future, was it a near future for you? Sorry for keeping you waiting. All right. I will record a video to answer your question. So the question was that, are we going to have a flat correction here? So looking at this chart is normal. So the first wave, second wave, third wave. If you look at the price structure here, it looks a little bit at 1, 2, 3, and then you may say, okay, another 1, 2, 3. But before we can, the way it stands now, we need to be a little bit patient because I don't usually expect a flat correction in the fourth wave. I do not personally. But it doesn't mean that it cannot happen. Are we going to have a flat correction in the fourth wave? I doubt it. Personally, I doubt it. But I think it's a bit early to start talking about the flat correction because the structure that we have here is bullish. It's not bearish. You see how the price came down very fast. And look after those, you see this was a bearish candlestick, another bullish candlestick, another bearish candlestick. But then after that, look at the bullish declaration here. Long candlestick, bullish, 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 bullish. You see? So the bulls are demanding that the price going up. Now the bearish trader push it down again. The bulls say, no, we want it to go up. And recently, the Federal Reserve cut interest rate. Wow, that's very interesting. So there is a food for thought here. It doesn't look very bearish. Another thing before I forget, because I'm a bit in a good mood today, so I'm talking a bit too much. All right. So now, but it's normal for an Elliott wave trader to think of a flat correction. Nothing wrong with that. It can be a flat correction. But personally, I do not expect a flat correction in the fourth wave. It doesn't mean that it cannot happen. But before we can start at this junction, all right, before we will think of a flat correction, what I would recommend to trader to do, you see this session here, the fifth minor wave of the third wave, this session here, okay, this session, okay, from March 2018, all right, to September 2018, March to September 2018, apply Fibonacci extension to that session and highlight the 138.2% Fibonacci extension of that level. Now, right now with TC2000, I cannot show you that unless I do not know how to use properly TC2000, because with TradingView, I can push it down and show you that level. So that level of 138.2% Fibonacci extension apply to this price section here. All right, the fifth minor wave of the third wave, highlight the 138.2% Fibonacci extension level. So when the price reaches that level, we want to see the reaction and be very, very careful. Be very, very careful. All right? If you are thinking of a flat correction, be very, very careful because the bullish traders and also the Federal Reserve want the price to go up more bad. Okay? Next thing that I want to show you. I'm now on the weekly chart. Yes, I'm on the weekly chart. See, George, you are now on the weekly chart. You stay on the monthly chart. Yes, I'm on the weekly chart. So look carefully. So on the weekly chart, we draw some lines, some channel before, not a channel, triangle. Can you see that? New trader, can you see my triangle? Traders that are very new to us, they say, George, I never see a messy chart like this. It keep you, okay, very, very focused, all right? So that's the triangle I'm talking about, the green one you see here. So that's the base of the triangle, you see the green triangle. So Ray say, where are we now? So in that triangle, we see connected this low and that low on the weekly chart. And now you see the price. When to touch the edge of it, see, it touch it here, here it break below, retest, this is what we are talking about. Come down. When back again, touch the top of that, you see, that's what I said to you, when you draw a triangle, you can extend the line because they can be very, very useful to you in the future. So here it is, it touch it, come down, went back, touch it, pull back, touch it down. Again, recently, it pulled back again. Now, what the price is doing now, the price is consolidating between, okay, the edge of all those extensions of our triangle. Can you see that? So it's bouncing up. So there's a consolidation, okay, between those two green trend line that are the extension of our triangle. So this is the top of our triangle we extending. We got this one here, and this is the base we extending. That's what we say, isn't it? So now what the price doing? Talking about medium term. It's a consolidation in the okay. So bouncing up and down. Okay. There was another triangle here. See this one here, the blue one. May I make it thicker for you? All right. There was another blue triangle. I think this video is going to be more than 20 minutes because there are more to say. I hope you watch in full. Otherwise, it's just a waste of time. So here it is. So here it is. Okay, there's another triangle. So what has happened? The price came out of that triangle, gashed down. Before we were thinking of here we were. So at the end of the third wave, okay, we have something that looks like an ending diagonal for that third wave. Price crashed down. Now the price was in this green triangle. Now the price, after crashing out of the blue triangle, now it's consolidating between the extensions of that triangle. All right, do you see that? But there's something very interesting I want to show you, Bill, that you want to pay attention to. Is what we call the short-term and the long-term equilibrium price level. So for traders that are very, very new to me, all right, understand that sometimes I reveal to traders the short-term and the long-term equilibrium price level because they are my friends, isn't it so? So today, the long-term equilibrium price level for the S&P 500, you want to note it down and you want to write it on your wall, on your fridge. Don't tattoo that onto your chest, all right? The long-term equilibrium price level is 2861.46. So you can call it 2861. You can call it 2862, all right? Or if you want the exact number, 2861.46. That's the long-term equilibrium price level. Look what the price has done recently. The price crashed down from the edge of that extension of that triangle. And where it's come to, it's coming to daddy. The long-term equilibrium. Look at what the price did here. So it bounced up, they push it back down, and again, now it got up. Now we are here. So what am I hoping for? In normal condition, we will prefer it here. That would be a nice scenario. That would be a nicer scenario that the price now pull back a bit again to retest that long-term equilibrium price level of the S&P 500 at 2861. Will it do that? That would be great. Does it mean that if it does exactly what we're expecting, will it continue to go up more? It may just come down and continue to go down more. And then you will say, George, I told you, it can be a flat correction. It's possible. I'm not betting on it at this juncture here. So something like this is not too bad. And then from there, take it away to complete that fifth way. But the question, you see that interrogation mark here, is this our fourth way that we expected anotherly? It just went vertical. I don't like that. I would prefer it to be anotherly diagonal move to touch that level of 2, 3, 3, 9, which it did, but we want it to be diagonal, not sharp. This is one thing that you need to bear in mind as we are dragging it around, and the Federal Reserve has cut interest rate, which is good for the stocks, all right? But, okay, so the short-term equilibrium price, so we have two equilibrium price level. The short-term equilibrium price level for the S&P 500, this one here, 2643. So you can call it 2644, or you can call it 2643.50. So those equilibrium price level, if you are trading the S&P 500, know where they are, mark them on your chart, don't remove them, have them there and know where they are. So I color mine in pink, I see that this, I know that, okay, that's my long-term equilibrium price level. All right. So for traders that are watching me or recording video, don't think that every time you see green or pink and orange, those are the equilibrium price level, okay? On this occasion, the pink is the long-term equilibrium price level here, okay? So that's what's happening here on the edge. So, in my view, personally speaking, all right, if this is the fourth way, it's looking more bullish than bearish, as I show you already on the monthly chart. So, I'm very reluctant to start thinking too much about the flat correction. Minimum apply the Fibonacci extension to the fifth minor wave of the third wave. See the reaction at the edge of a 138.2% Fibonacci extension level. Personally, we may see a bit of pullback. Don't get carried away. You may pull back gently from that 138.2% level to retest this top somewhere here. It may do that before pushing above it. The price has a high chance to go up more. As you see, the structure that we got here, becoming very, very bullish, aggressively bullish, in fact, because this is a sharp move down. And the next thing that we see, the bullish traders say, we don't want that, okay? And they push it back up, and they are hanging it and push it down. And you see, even in this month of August, people are selling. Now we have the short-term the long-term equilibrium price level at 2861, watch that level. So, in fact, are we going to continue to oscillate between the extension of that triangle? So this is one thing you don't want to forget in this video. There is a consolidation taking place between those two extensions of that triangle. And also remember, so at this junction, all I will say to traders, priority to bullish signal above the long-term equilibrium price level at 2861, all right? Watch out for the resistance at 2941. There's a resistance there, 2141. So now it's sitting on it like this, okay? On a daily chart, we will prefer a little bit of pullback to allow a kind of a double bottom will be great here, or a test of that long-term equilibrium price level. It may not do it, it may do it. So today it will be nice for it to pull back and then gently, and then to give people another chance to enter the trade. What we can do on a daily chart is to apply the pitchfork tool on a daily chart like this. So if you want to zoom into your see what's going on, the trajectory that is likely to take, that's the trajectory that is likely to take. So apply the pitchfork tool on a daily chart, and where with that, trade on the edge, look for a trade. So at this junction, this is what we are saying to traders. The Elliott wave count is one step at a time, and it will come to a point where you need to be a little bit patient. It's like you are driving and now you get into a congestion. What do? Do you keep speeding? No, you don't. All right. You can have a very important appointment. You are caught in a congestion. That's what's happened. So what we are experiencing now for a market in general, there is a kind of congestion. The bullish trader do not like it. The bearish trader do not like it. But it happens sometimes. And then for us that are using the Elliott wave principle to forecast the market, talking about accurate Elliott wave forecast, S&P 500 index, all right? We expected a fifth wave, which means if there will be a correction, if that correction is even a flat correction, if one is selling during the corrective phase, one should understand that still there is one more leg of the trend that is overdue, unless something very, very bearish did happen. So remember, if one is selling at this junction, one should, okay, you're selling with your right hand side, get your left hand side ready to buy. Okay, that's what I'm saying. So though I'm not saying that the price cannot pull back, with the wave count, accurate Elliott wave forecast, there is a high chance that there is one more leg up unless the fight between China and United States, talking about the tariff, get a little bit messier, or the Federal Reserve come up with another story, all right, and quickly put our interest rate big time when they start cutting it. So there is a congestion at this junction. So all in all, first wave, second wave, third wave, so divided into 5 minor wave. Is this the fourth wave? So we can say, all right, today we accept it as our fourth wave. We are working with that. Okay. Is this the starting point of the fifth wave? The fifth wave, unless we're going to have what we call the Elliott wave failure, when the fifth wave will fail to go above the top of the third wave, then we can start talking about correction now. So that doesn't look like a fifth wave to me. There's a high chance that the price may continue to go up more to complete that fifth wave, okay, for us. When the fifth wave is completed, we'll be talking about 1, 2, 3, 4, 5. That 1, 2, 3, 4, 5 will become one wave, impulse wave of a higher degree, and then we'll expect a correction, and that correction will form the second wave of a higher degree. I hope I have not been talking too much. You see, George, you are talking too much today. So that's 70 minutes, not too bad. We're going to wrap it up now. Okay, so this will conclude our discussion today about Elliott wave forecast, S&P 500 index. Do not forget the long-term equilibrium price level, 2861. Those are powerful key levels that I don't want to share the formula with anyone. And the short-term equilibrium price level is 2643. Mark it on your chart. Extend that green triangle on your chart roughly. So I just draw, you see what I did? I just draw this one like this, and then pick one point here, and just draw a line through this one like this. Do something like this. Just remember that the intersection point is somewhere near this pullback here, and do similar thing. You see this candlestick bar, okay, in June 2018, that's where the two line of our triangle is just, so I draw it roughly. Some people may say it's not a triangle, I just draw it, but you can see that it's working beautifully. And do the same thing and leave it on your chart, okay? So I hope I didn't keep you waiting too long, Bill, all right? And so if you have any more questions, do not hesitate, all right, to put in the comment section. In due course, I will be recording another video to answer your specific question. If this video has been totally useful to you, please let us know by giving us the thumbs up, please. However, if you think that, George, 18 minutes should be 10 minutes, George, I don't like S&P 500. I don't like your accent. Please mark it down. However, if you think that it's an essential tutorial that can open the eyes of other S&P 500 Elliott wave traders, feel free to share it on the social media. All right? Subscribe to our YouTube channel, 24 Elliott Wave, digit 2, digit 4, Elliott Waves in plural. Be sure to click on the notification bell so later we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TS3W24 traders talking about Elliott wave forecast S&P 500 index. We are recording this video today because a YouTuber, Bill, did ask me, is this a flat correction? What do you think, George? So those are my thoughts. Thank you for watching.